evening, everyone. Tonight's top story is social and environmental disclosure. As we all know, financial crisis is coming and coming, again and again. Why? Because we are misunderstanding social and environmental disclosure. Tonight, we have top 5 issues about this. Let's go to the story.
The first issue that I found is a conflict with AASB and IASB. The adoption of IFRS by AASB makes the accountant tasks complicated. One example is AASB 138 and IAS 3A, the intangible assets. Different provisions apply to different forms of companies, different cost models, and different types of business. On the other hand, some companies reject the adoption of IFRS for its high cost to change, and thus local accountants should study old ones and distinguish it from IFRS. As a result, the competence gap in dealing with IFRS between local and foreign accountants is becoming bigger, and local accountants lose their standing in the market. So here my recommendation is AASB should hold more educating or training programs for local accountants and encourage companies by supporting and compensating for change.
My issue is focused on the strategy that prevents environmental damage. So, from the following part of the video, I'm going to explain the concept of environmental management accounting. There are many stakeholders that are affected environmentally by business operation. This is why accounting professions in the business should understand the concept of environmental management accounting. It helps business to comply with environmental regulations, use resources efficiently, and set strategy to prevent environmental damage. There are 2 types of information in environmental management accounting. First one is physical information, which is about energy flow, water, and materials. And business has to make sure that if there is physical input, there has to be output, either the form of product or waste. Monetary information is about environmental cost and income. There are cost categories to clarify environmental cost information. Examples of these categories can be waste and emission control cost, research and development cost, and so on. These categories combine with physical information to manipulate eco-efficiency indicator.
So now I'm talking about agency issue. Agency issue is the aspect that comes through between the auditor, shareholders, and director. A simple agency model indicated as different parties has their own interests. Principal are lack of confidence and trust to the agents that seeking to provide them their best interest. And therefore, the principal are to place a mechanism to enforce their best interest. While mostly in shareholders and director relationship, it is the auditor. In an auditor and shareholder relationship, auditors act as agents. Like directors, for example, auditors may consider their potential audit liability, whereas auditors undertake the responsibility if they provide the wrong audit opinion to the shareholders. Shareholders may find an auditor's report frustrating due to the limitation in the scope of their work. Enron is a well-known case of an agency having issues. Enron had published misleading financial statements to the public. They were audited by an auditing firm called Arthur Andersen, one of the big 5 firms in the past. This happened due to a conflict of interest over significant consulting fees generated by Enron. Therefore, Andersen helped Enron in making a fraudulent report.
The issue I would like to talk about is accounting fraud, like asset misappropriation and fraudulent financial reporting. Asset misappropriation simply means that employees use their position to carry out fraudulent activities, such as data theft or false expense claim. Fraudulent financial reporting involves intentional misstatement or omission of material information in organization financial report. Common examples like concealing liabilities and overstate the value of assets. Actually, fraud is difficult to prevent because detection of fraud is costly and impossible to detect all. Most of them are not obvious, so it is incalculable. So, why do the companies likely to commit fraud? Obviously, fraudulent activities can greatly reduce financial costs and increase profit, but it will have some adverse effects on the society, like misleading the investors. What should accounting profession do to prevent these issues? Internal control is very important. like regular check accounts, and even establish a strict procedures. Lastly, accountants and auditors should maintain professional behavior by complying the standards.
The final issue is high turnover rate.
Hong Kong accountant is the best example for this. Their daily works are inhuman. Many workloads and high overtime works. Their pressure increased, but not enough time for sleep. However, this is not the whole story. They usually travel to China and any other country. Treat with courtesy is affiliated with that. Heavy meals and clients' pressure drain their soul and health sharply. Finally, they cannot make it, and then they choose to resign. But the pressure join in. If only casual staff remain, but the experienced one has gone, then how the social and environmental disclosure can perform well in the report? The answer is no.
So here is the 5 top issues for social and environmental disclosure. If we take more attention to this, I think the next financial crisis will not be happening. Thanks for watching.